Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the 9 easy steps you need to follow to become a successful full-time swing trader. We're going to be talking about what I did, and at the end of the video, we are going to be talking about a fantastic strategy that I've used this past month to make over $6,000. So stay tuned for that. But guys, I hope you guys all enjoyed this. Whether you guys are a beginner or maybe you're a full-time advanced trader, you guys are going to get a ton of education out of this video today. So I hope you guys all enjoy it. Like, subscribe, and if you guys want to learn more about swing trading and how to find opportunity, how to find stocks, our entry points, exits, more importantly, just teaching you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. This is honest strategies that I've learned over the past 7 years. It's our awesome school called the Swing Trading Masterclass. And we have a great sale going on, one of the largest sales we've done with only 7 spots left for Code Beginner. Code Beginner for 50% off. So when you get to that checkout page, write in Code Beginner and you guys will get that code. So I hope you guys all enjoyed this, and let's jump into this. All right, so one of the most common questions that I get asked is, Carter, I want to become a trader. That is my goal for 2025. How can I do that? Well, I want to be very, very transparent and be very honest with you. It's going to be very, very, very difficult for you to have a job right now and for you at the end of 2025 to quit your job and trade. You need to have very, very realistic time frames, right? I think this is one of the biggest issues with trading is you see YouTubers and TikTokers and Instagrammers going, yeah, you can learn to trade in 30 days, in 2 days, in 20 days, in an hour. No, you can't. Trading, at least for me, I try to treat it like any other career, like a doctor, a lawyer, an engineer. What I mean by that is it takes years of practice, hard work, and a lot of traders will try to trade, and after a month, they'll go, oh, this is too hard. When no, you're trying to do a job with a month of education. It's not going to work, right? So you got to have that approach. Do you think a doctor just goes into a surgery without education? No, he has practice. He has years of schooling. You have to have that same approach for trading. So I just want to get that off my chest. All right. So what would be the first thing I would do if I was starting over to trade, to swing trade? That is my goal. Learn it, right? Learn the basics. What I mean by that is, what is swing trading? Swing trading is when you buy a stock, you hold it for more than a day, but less than 1 year. You can swing trade almost anything. You can swing trade stocks, ETFs, cryptocurrency, Forex, any asset really. But for me, I swing trade stocks. That's what I've always had a passion about, because I actually went from day trading to becoming a swing trader. The reason why I did that is because of the flexibility. At the time, I was still in school, and day trading in a college class is very, very difficult. So I was losing a lot of money, and I found swing trading because you can do it with a full-time job, and there's just a lot more flexibility behind it. This brings me to my second thing that you guys need to do to become a successful swing trader. Like I said, kind of understand what it is. The next thing is to figure out what type of trader you are. A lot of you may be watching this video, think you're a swing trader, when maybe you're just a long-term investor, and that's completely fine. Or maybe you're a day trader. Maybe that's where you're drawn to. You need to figure out what type of trader you want to be. The biggest recommendations that I would give you, a day trader, you have to be actively tuned into the market. You're in and out of positions often within minutes or hours, compared to swing trading, where you have a little more flexibility. You can buy a stock today, hold it for 6 to 9 days, and then sell it. That's what I do. That's the approach that we're going to be talking about today. But learning the basics with swing trading is very, very important. You guys are going to want to look into technical indicators like the RSI, like moving average lines, all that good stuff. But don't worry, at the end of the video, we'll talk about how I use them for my strategy. The third thing that you guys will need to becoming a full-time successful swing trader is you guys are going to need tools. You're going to need tools. Tools are going to be like your broker. This is going to be how you guys planning on finding opportunity. So for me, the broker I use and the scanners I use are very, very simple. I love Moomoo for my charting and my scanning, and I will occasionally use Finvez. I'm not a trader where I'm going to spend millions of dollars on scanning criteria, on the trade idea scanner. No, I'm not that trader, right? I'm a trader where I'm going to use stuff that I've felt comfortable with. I'm not going to spend extra money, because one of the things that I did with day trading is I signed up for all those expensive scanners, those expensive stuff. And honestly, I felt the pressure of, okay, if these scanners are $500 a month, I have to make a minimum of $500 a month just to break even. So I wiped that away. I said, I need to figure out how to do that with the brokers. So I started up using Moomoo, and I absolutely love them. So I'll put a link to them down below. You guys can get to up to 20 free stocks just by signing up. But more importantly, Moomoo offers paper trading. Paper trading is using simulated money to practice your entries, your exits, and your risk management skills. You can do all that without risking real cash. It's all simulated, which will save you so much time and will help build your strategy. But figuring out what type of tools are so incredibly important. And one little thing that I would highly recommend doing, especially if you're a beginner, I even do this now, is to journal those trades. Journaling your trades is probably one of the most underutilized things traders don't do. I always love to look back at what's working in the market so I can focus on that and trade stocks with those setups, and then look back at what's not working and then try to, stay away from those setups. That's what I've done. And I'll put a link to our digital trading journal down below. This brings me to my fourth thing you guys need to do to become a successful swing trader, and that is to paper trade. You need to paper trade and just get comfortable with the softwares that we talked about. You need to paper trade. You need to practice drawing on your charts. You need to practice scanning for opportunity. You need to treat this like a job, right? You are the result of your actions. What I mean by that is, if you're somebody that's watching this video and you're going to put in subpar work, you're going to get subpar results, and then you're probably going to complain about how hard swing trading is. I don't know, but a lot of traders don't put in a lot of work and then they complain about it. The great thing about paper trading is you figure out what's working for you, because we're all different people. We're all different traders, and then you can narrow in on a strategy for you. Now, after you paper trade, the next step is you have that strategy, develop that strategy, fine tune that strategy, continue to paper trade and just work on it. Always review those trades, figure out how you guys can adjust your strategy. And another little pro tip is build up a checklist. So before you ever enter a stock, you have a set list of criteria. So you're always choosing quality over quantity. Now, after you guys have that strategy, it's trade-in time. This brings me to my sixth thing, and that is to start small. Start that small account challenge. $50, $100, $500. Now, if you guys are profitable with the $100, the only thing that's separating you from making more money is just your account size. So you just need to stay the course and be consistent. But starting out with the small amount of money is so incredibly important, because you're going to be building up the emotional aspect of trading and figuring out, okay, this is hard, right? This is hard. When you see your account go red, when you're in green, you're going to have all these different types of emotions. So you need to start small and build up that emotional tolerance. Now, this brings me to my seventh thing. After you guys start small and you're being consistent with those trades, boom, 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 boom. What do you do now? Continue to learn. The second I felt like I knew everything and I was very consistent with my trades, I was on top of the world. And I funded an account. I was ready to rock and roll. Boom, I knew everything about trading. No, I was not. I did not know. The second you think you know everything about the market, or you think the market owes you something, that is the second the market takes something from you. So you need to always consider yourself a student to the market. So check out our school, code beginner 50% off. But anyways, enough with that. This brings me to my last and final one, and that is to be around a community, continue that process of learning, and just review everything that we talked about. Review it. For me, I continue to paper trade. I know it sounds crazy, but I've been a full-time swing trader now for 7 years. So I've always had the rule of threes, where if I take 3 winning trades in a row, boom, 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 I'll take a step back. Maybe take a day off. Maybe take a day off, a couple hours off, trading session off. If I have 3 losing trades in a row, boom, 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 I need to reset, take a day off. So the rule of threes is something that is so awesome. and it will help narrow in, right? It'll help narrow in on opportunity in your stocks because you can only trade three. Another thing is if you've had those three losses, it's good to take a step back, review, and reset. If you've had three winners in a row, it's good to review those trades, figure out what's working in the market right now, and adjust that approach, and then start narrowing on those stocks. You guys can make a lot of money off that. All right, enough with that. Let's turn to the computer and see some of our more recent swing trades. All right, so the approach that I love the expression miss, make it simple, stupid. I'm not the type of trader that's going to overcomplicate my trades. So the first thing that I do here is look at trends. You guys can see here with MasterCard, we have this great upward trend, and we also have all these different, colors and lines. So these are indicators. So these up on the chart here are indicators. They're moving average lines. Up here or down here, this green one is the RSI line. So these ones here, they act as trend indication and they act as support and resistance. Support is just where we get natural tendencies of seeing buying pressure. So you guys can see where it's hit these levels in the past on the red several times, even a little bit on the blue here, but also they act as resistance. So they hit it and we have sell off, hit it, sell off. So how do you establish the difference? When the stock is above the moving average lines, they'll act often as support. So with the stock above the moving average lines and it sold off down to that blue line, that's where our scanner notified us. So now what we were looking at is, okay, we have a stock on an upward trend and it sold off down to a support line on that 90-day moving average line. We also looked at the RSI, which is just the relative strength index. Historically, anything under a 30 is an undervalued point for the stock. Anything over a 70 is an overvalued point. So it was trading for near and around a 33. So it was right near and around that undervalued point. The last time it was trading there was all the way back in here. And what happened? We had a huge buying pressure. Previous to that, right, was in here, buying pressure. Previous to that was in here and we had that good spike up. So now here, let's review. Stock on an upward trend, sold off down to support. The support here was that 90-day moving average line. And it also was undervalued on the RSI. Does that mean you enter? Absolutely not. You want to look at several different time frames. So right now we're on the daily time frame. So each candlestick represents 1 day of trading. Then if we go to the hourly, now each candlestick represents 1 hour of trading. So looking at this here, we had this general downward trend here. So it hit it and we just had natural tendencies of getting sell-off. And this is where we kind of got notified. We got notified down here, and this was a very undervalued spot for the stock. And then it started to get this breakout approach. This right here would have been the absolute best entry point for the stock where it was trading above that trend. So you can see that general downward trend where it got that initial pop up. Ever since then, the stock has been rallying its way up and it's been using those moving average lines. So that 50-day, which is the yellow, moving average line as support here. So that's just where we're keeping our stop loss. And the reason why that is so cool is because it's used it as support in the past. So we're just going to keep an eye on it and see what happens. This is a very simple approach just by using a basic breakout strategy on the hourly time frame, moving average lines on the daily, the RSI on the daily. This is what I've done for over 7 years. So if you guys want to learn more about swing trading, check out our school. You guys can get 50% off by using code BEGINNER. I'll see you guys in there. Hope you guys enjoyed it. Take care.